Hello, so we can see that the US dollar index is still holding near the 98 mark despite the recent soft data across the jobs market and the ISM manufacturing PMI, which is a leading indicator for economic growth. We can still see that price action hold possibly supported by increasing haven demand across the markets with increasing geopolitical risks. So with that, from a daily time frame perspective, we can see a possible head and shoulders formation on the US dollar index chart, extending shoulders to the right side as it consolidates sideways, waiting for confirmation on either end. So if this was a head and shoulders continuation pattern for the overall dominant downtrend of 2025, we're going to need a clean hold below the 97 and 96 zones to be able to extend further downside forecasts for the US dollar index towards levels 94 and 89 respectively, aligning with the troughs of 2021, which would likely boost the Eurodollar and the British pound towards their 2021 peaks. Now, from the upside, if you do not manage to have a clear downside breakout for that current pattern and have a clean hold above levels 99 and 120 once again on the chart, then we might have upside risk on the US dollar once again back towards levels 170 and the 103 and possibly beyond, reversing the overall bearish outlook for the US dollar index. Now, with respect to the Eurodollar chart and also from a daily time frame perspective, we can see an inverted head and shoulders formation capped below the 118.30 and the 117.40 resistance zones, clear levels that need to be broken to be able to extend bullish forecasts to the upside towards the 120 and the 124 marks, aligning with the 2021 peaks, respectively. Now, from the downside, if you do not manage to have this bullish breakout and have another clean hold below the 116 mark, then you might have possible downside risks on the Eurodollar once again back towards levels 115.70, 115.20, and 114.50 for potential long-term bullish positioning once again, unless proven otherwise. So despite the fact that we had positive readings across Eurozone inflation indicators and ISM manufacturing PMIs this week that are likely positioning the ECB for a near-term rate hold in comparison to the near-term dollar stance and Fed rate cut expectations, positioning the overall forecast for the Eurodollar towards a bullish tone and the US dollar index to a bearish tone, we still have geopolitical risks lingering in the background that might alter the overall market narrative.